Welcome to Crescat's live market call featuring our macro and activist mining research. I'm Kevin Smith, Crescat's founder and chief investment officer. Before we get started, please read through our important disclosures being shown now. These and additional disclosures regarding the risks involved in the type of investments we will be discussing can be found on Crescat's YouTube channel and on our website. Crescat's live market call is about sharing timely, macro, and newsworthy geologic updates on Crescat's activist metals positions, both the positive and the negative news across our holdings as they arise. The discussion and topics will not cover all aspects and an investor should consider when deciding whether or not to invest in any of the securities that are part of our presentation. The type of investments that we discuss can carry significant risks, and whether or not to invest should be a determination made with complete investor suitability in mind and in connection with a professional advisor. The topics and themes that we will discuss are the opinions of Crescat as a mining and exploration industry advocate. Our objective is to share the overall geologic progress of our strategy in creating new economic metal deposits in viable mining jurisdictions around the world. The forward-looking business opportunities we discuss may not come to fruition or may not have a significant impact to the value of a security. These presentations should not, under any circumstances, be considered investment advice or an offer of investment advice or services. Crescat's managed funds only accept accredited investors, and this presentation has generally been put together with that level of audience sophistication in mind. Any securities discussed do not represent a full portfolio and may only represent a small percentage of any Crescat Strategies holdings. These securities may or may not be held in any Crescat managed portfolio. If you enjoy our videos, please click on the like button and make sure you're subscribed to our YouTube channel to get notified of upcoming episodes. You can also follow Crescat Capital on Twitter for ongoing macro research and important news updates on our activist metals positions. If you want to learn more about Crescat's investment strategies, we encourage you to reach out to Merrick Iwahashi. His contact information is on the screen now and can also be found on our website at crescat.net. So let's get started. Today, we're going to have the usual format with myself going first and talking about our strategies and some macro themes. Tavi will go next. Tavi's in Sao Paulo, Brazil for a couple of weeks, and he has a pre-recorded segment that he just recorded, so it's very fresh. He'll be going over some macro topics. And then Quinton has a very special update today, a review of 2024 and a preview of 2025 when it comes to, over 20 of Crescat's activist metals companies that have been selected based on the criteria that these are our holdings that are actively exploring currently and have active plans for exploration in 2025. And so, look, my section is going to be brief today. I just want to talk in general about what Crescat's hedge fund strategies are. We have 3 private funds. Our primary objective with these videos, of course, is that we are marketing the firm. We are trying to attract accredited investors to become interested in our funds, and these are the 3 funds that we manage. We have the Global Macro Fund, which is our flagship fund, the most comprehensive in terms of the different themes that we express, and both long and short themes, and our activist metals position is a prominent theme in that fund as well. We've got the Precious Metals Fund, which is exclusively our activist metals focused fund. It's a long-oriented fund at this time, and that's what Quinton will be speaking directly to in his segment. And then we've got the Long-Short Fund, which is our equity-only subset of that Global Macro Fund, traditional long-short equity fund. but the activist metals portfolio also features very strongly in that fund today. If we look at the next slide, this is really the DNA of what Crescat is all about, and that is our investment process. We are global macro thematic, and we are value oriented investors. So at the core of everything, it is macro and value driven, and in support of how we do that. Quant models play a very important part, whether it's our AI fundamental equity model, our macro models, our activist precious metals model that we've developed with Quinton, or our energy model is another example of that. We do work with, we're not only quant model driven, we do work with industry experts as well, and that's certainly the case with Quinton and our activist metals portfolio. We have other analysts that we work with that are experts in their fields too when it comes to our biotech long portfolio and our energy long portfolio. And overall, it's important to understand that as value oriented investors and as that we are, and as contrarians that we are, we are a relatively aggressive firm in terms of the risk that we are willing to take and seek like-minded clients as value investors in order to achieve the return objectives that we have over time and over complete business cycles. So we are willing to take a more moderate amount of risk than perhaps your average investment advisor out there. There is a higher degree of risk associated with our portfolios, but we believe a higher degree of upside opportunity to more than justify that risk, and that is important to understand. Let's keep going here. Just to summarize the key themes that we'll be talking about in the presentation today, Tavi will be talking about a lot of these in his segment coming up next, and Quinton as well. And these are key themes for 2025, but especially the first quarter of 2025, because we think there are a lot of catalysts that are on the table right now for Q1 of 2025. And one of the big imbalances that we have, we've talked about it for a long time, warned about it for a long time, and it still hasn't played out, but it's still an enormous risk, and that is the extreme valuation risk in the S&P 500 and for mega cap tech stocks today. We'll be talking a little bit more about that. Tavi will be talking about it, and so will I. But just an important theme to keep, and risk to keep in your minds. Second, we have the unsustainable U.S. debt and deficit problem that is a key feature of the macro landscape today, and it's something that is going to be tackled in our understanding by the incoming Trump administration in a major way. And one of the people that is leading that charge is Scott Bessent, the incoming Treasury Secretary. We encourage you to listen to some of his interviews to get a sense of what he has planned. One of the things he talks about is a quote, big Bretton Woods realignment plan. Well, what the heck is that? I'm not going to go into all the details of that right now, but I encourage you, especially if you're an accredited investor and want to learn more, reach out to us, and we can share a more in-depth paper that we have put together regarding this plan. Number 4, one of the key themes we're going to be talking about today, Tavi especially, is the risk of a U.S. dollar devaluation. We think that risk is highly underestimated in the marketplace today. I mean, right now the dollar has been on fire over concerns or over one aspect of the bigger Trump administration grand plan, and that is the tariffs. And so the dollar has strengthened on this tariff concern. We think it's one element that is of the overriding Trump plan, but we think it is just one element, and it underestimates the true the true objectives of the incoming administration, which we believe that does include a significant dollar devalue and coordinated dollar devaluation. Look, we've warned about the risks in the marketplace today, especially for mega cap tech and the S&P 500. But there are extraordinary contrarian value opportunities also in the market today. They are in uncrowded segments of the market, and of course, that is what our activist metals portfolio is all about, especially in the small cap and micro cap exploration segment, where we see extraordinary value and upside appreciation potential in our analysis. Again, that's something that we can get into that in much more detail if you want to call us and set up an appointment to go through our valuation model. We can't talk about hypothetical performance in these public presentations, but we can have a one-on-one call if you're an accredited investor, and we can show you our valuation model in depth, and encourage you to do that. So I have one more slide here that I'm going to talk about, and this is a Goldman Sachs chart that came out recently, and it's just one more way of looking at the valuation risk in the S&P 500 for large cap stocks, and this is looking on the left hand side of this chart, and marked by those marked by the blue line. You can see the concentration risk. So it's showing the largest market cap stock in the S&P 500 relative to the 75th percentile stock on the left hand side. The degree of concentration in the S&P 500, and of course today the stock is Apple, and it's kind of switched back and forth recently between Apple and Nvidia, but it's showing the concentration of the largest market cap stock relative to the rest of the market as extraordinarily extreme. And it's the same thing on the right hand side of this chart, where it's looking at the weight of the top 10 stocks in the S&P 500 relative to all the rest of the stocks, which you can see it's like 38% of the S&P 500 is concentrated in 10 stocks. Of course, these are the Magnificent Seven stocks, 7 among those 10, and we've shown in many other ways how the valuation of these companies, whether it's relative to GDP, whether it's relative to underlying earnings or free cash flow, or margin adjusted PE ratios or cyclically adjusted PE ratios. We've shown in a number of ways how the valuations are truly historic today. So there's valuation risk, there's concentration risk. This is a big deal, and frankly, I think the sweeping changes under the Trump administration that they have planned, could coincide with some type of a significant correction in these overvalued large cap and mega cap tech stocks. It's an extraordinary risk, and I think it's a risk in the first several months of the Trump administration. So that that's the only macro slide that I have for today. Tavi's going to go much more in depth. He pre-recorded this session because he's in São Paulo, Brazil. So take it away, Tavi.
All right, everybody, let's get started here with my presentation. Happy New Year, everybody. Hope everyone had a great time with family during the holidays. Merry Christmas, and I hope it was a good time to reflect over some of the things that are, big ideas for markets especially. This is going to be the theme of the presentation today, is where I view the risks and opportunities for 2025. I'm going to start with sort of a list of things that I view as important. I think in 2025, there's an important level of risk of a fiscal cliff problem, where markets are potentially underestimating the effects of reduced government spending. And I view this as I remember speaking with other folks back a few months ago, even prior to the Trump administration actually, or Trump got elected. I had a few discussions with folks regarding the potential for lower fiscal spending. And most people at that time, the narrative was quite the opposite. It was very much on the side of that would be possible to see. And now we have Doge and all these ideas of how to cut spending. And I view that the bucket that needs to be cut the most is actually interest payments. And the only way to do that is the suppression of rates. The second risk that I think it's important that not a lot of people are paying attention to is in line with lower fiscal spending is the fact that we're also seeing global central bank liquidity starting to contract. So when you look at central bank assets and how much they own in terms of assets overall, they've been contracting since 2022, which has been mostly a situation with the strength of the dollar. Most of the liquidity that they provide is in local currency terms. So when the dollar starts to appreciate, you tend to see the contraction of their own liquidity globally. And this tends to be also a very important metric to pay attention to when it comes to turning points in markets. The third one that I think I'm not sure why I put in third because it's probably the most important one, which is in line with the two things I said before. However, it's probably the biggest macro trend that I see for the following years is the potential peak of the US dollar. I view this as the kind of reversal of the milkshake theory. I'm good friends with Brent Johnson with Santiago Capital, which he created this idea about the dollar basically sucking all the capital, or U.S. sucking all the capital of the world, and dollars, and in terms of the debt outside of the U.S. being priced in dollars as well, and how that would essentially benefit U.S. equities and create this sense of U.S. exceptionalism. And boy, he has been right about this whole situation. Now, I view this, we're at the that level of extreme outperformance of U.S. equities and the U.S. economy versus the rest of the world. It's just not sustainable. If we want to continue to grow in the U.S., we got to actually stop suffocating the rest of the world with the dollar strength. And I do think that there's going to be either a coordinated movement towards lowering the dollar, or even if it's not coordinated, organic devaluation of the dollar caused by lower fiscal spending and actual lower or suppression of interest rates, which that combination tends to be quite negative for dollar trends. The fourth thing that I need to point out as well is the risk of multiple rate cuts by the Fed, as we see a disappointment of growth in the U.S. with the sentiment being as positive as it could be after the Trump election, with again this notion that we've seen exceptionalism, and that we're likely to see exceptionalism, but if anything, we've been through that for the last few 2 decades, and I think we're more at the end of that than at the beginning of it. The fourth risk that I see to the market is the market rotation out of this concentrated Mag 7 world. I think that we've seen a few times in history where there was quite concentrated markets. One that comes to mind is 1929. There was a good level of concentration of a few stocks at that time. The Nifty 50, even back in the early 2000s or the tech bubble as well. And all these things don't tend to end well. I don't think this will be the case. I think the rotation out of those names could be quite problematic for overall markets. You got to have that at least as of your list of risks for 2025, one of them. The other one that is related to that rotation dynamic is actually the rotation out of U.S. equities, which by definition would be out of those Mag 7 names as well, given the concentration, but into international markets. And that to me is just something that I view as a risk, but also as an opportunity, and why I've been focusing so much in international markets more recently. Another risk that I see that I think is starting to get to silly levels is the crypto space. MicroStrategy levering up as much as it has been doing. To me, the failure of that strategy, it could potentially trigger a broader meltdown in the crypto space. especially given the fact that he's one of the largest holders now, or his company is one of the largest holders of Bitcoin today. I would think that a forced sell-off of his assets would actually be quite significant for the Bitcoin space, but also the crypto space. And not to mention, it's not really something aimed at Bitcoin. There's also other issues, especially regarding Fartcoin and other things that are starting to gain momentum in terms of speculation and peer speculation, of which I will touch on it in a minute here. Not in a minute, but in the middle of this presentation. Another thing that has not worked that I would certainly point as one of the top risks for that investors should watch for in 2025 is credit spreads widening. This is something that we've been warning for some time now. Nothing has happened. U.S. debt, in terms of corporate debt, is starting to be rolled over at significantly higher rates. I think the impact of that is higher, obviously, interest costs, or I should say, cost of debt, that ultimately drives the spreads to become wider, especially if you see any level of disappointment of growth in the U.S. economy. And not to mention, usually credit spreads tend to be very tight right before recessions. Is essentially the market pricing out entirely the risk of something bad happening, and therefore saying that corporate ratings should be actually better than risk-free rates, which to me, while some analysts have been trying to justify those reasons or rationalize that, I think that's absolutely ludicrous, because an institution that can print money versus an institution that is forced to default and has issues. I think the default, from a default standpoint, you cannot compare those two things at the same degree. So another thing that I would say that has been completely dismissed by markets now is the potential for uncontrollable surge in oil prices. If you think about how much risk we've had geopolitically and the problems we've seen escalating all over the world, I would point from 0 to 10 that geopolitical risks have been close to a 10. We've been, some could argue that we're on the cusp of World War III, or at least a major conflict between large economies. We're already, in the middle of a war. We've got a lot of issues in the Middle East. It's sort of shocking to see the oil at these levels. And so if you would plot the risk of geopolitical tensions rising today versus oil prices, I think that's very mispriced. It's not like we're seeing a flood of oil supply coming out of markets. Yes, we've seen more supply than the market expected, therefore causing these changes in prices. But let's be honest, that's not really the story here. The risk is that we see more of 1970s environment where oil does have more of a spiky period where it goes up quite significantly and causing a lot of turmoil in markets over time. The other last thing I would like to mention is the risk of tariffs that have been dismissed. I mean, the two words have been most used since Trump got elected. One of the two words that have been most used has been negotiation tactics. And that's what people say right after seeing tariffs usually. And yes, I do see and understand the view of that idea, and I think he is one of the guys that can be successful at potentially accomplishing that. I also have to think as a market participant that when investors have completely priced out the risk of things becoming more long-lasting and enduring in markets in terms of tariffs, that becomes a problem to me as an investor as well. So I'm quite concerned about that. And I do think that if that could even create more disruptions of the final move on the dollar on the upside, that then creates the, either a coordinated, effort to devalue the U.S. dollar or something along those lines, that can certainly be in the cards. And I'm paying close attention to that. Now, let's start with, let's go deeper into this presentation and start talking about charts. It's something I've been noticing, if you look at the world, implied volatility or implied probability for interest rates. In this case, we're looking at the Fed funds rates, of which they have basically 0.34% decline of the current interest rate, which is at a target of 4.5. So it would be at a 4.15 in this case if you reduce it by the implied volatility by the end of 2025. I think that's very unrealistic, especially because I do think that the Fed is almost forced and the government's almost forced to take any excuse they can to lower rates more than what the market is expecting in this case, given the fact that we have so much debt and the burden to service that debt is becoming quite a problem. I mean, we have, we're running close to 4 to 5% of GDP in terms of interest payments right now, of which, the only way to fix this problem is really to suppress rates. And the Fed has a big impact on that by lowering rates if they would like to. I think they're going to play that card all day, regardless if it is. I don't want to get into the discussion of dependency or independency of the Fed and all sorts of discussions that tend to get into and when we start talking about that. But I do think this is an important aspect of what's been happening today. Global central bank assets is something I view as a problem. With the strength of the dollar has been causing the contraction of the aggregation of all central bank assets of a decline of about 23%. This is a big problem. To me, this in line with the decline of fiscal spending is something we should be aware of. We should be at least considering as a risk. Liquidity is one of the most important metrics when you think about risk as well. And this to me is very problematic. Concentration of markets, there's a chart to kind of show that outside of showing the top 10 companies or top 7 companies weight relative to the markets. The other way you can do that is just looking at the ratio of technology companies relative to the S&P 500, of which you can see the tech bubble peak is somewhere close to where we are today. In fact, it's very, very close. It's almost, spooky close. And, again, people don't think that it's possible to see a decline of these trends because we've seen such a steady movement to the upside all the way back to 2002. But I do think that there's a very strong possibility that tech bubble is extremely overvalued and likely to see a deflating, environment in the following years with a rotation out of that sector. Valuation is another thing that we should consider here as well. Valuation is something that's been overlooked and it's something that's been ignored. Most people that when you mention valuation, they usually tend to say, well, valuations are not a timing indicator. I can hear people right now, just as I mentioned, and look at this chart. And while that is true, people cannot just ignore valuations. I mean, at some point, the smartest investors in the world, believe it or not, do pay attention to that, and they tend to rotate out of those things into other places. There's a reason why you're seeing other markets is starting to do well, and those are not unique. They may seem unique. These are just signs of easy that had an easier way of understanding those markets and therefore attracted capital quicker, like India or Argentina. But I do think that we're going to see a spread of other markets receiving capital outside of the U.S. When you look at the Fed, the earnings yield in the S&P 500 today relative to the Fed funds rate, which is this chart that you're looking at, basically markets are almost as expensive as they were back in the tech bubble environment. Now, some people that like to be sort of perma bulls and really bullish and no matter what happens, they will likely say, well, it didn't quite touch the tech bubble peak. But, that's not, you don't play with fire like that, in my view, with markets. When things get very extreme, you just start rotating out and start focusing in other places, natural resource companies, mining companies, but also international markets have been neglected for a long time that maybe deserve more attention. Okay. This is just a technical chart. Russell 2000 is a great proxy for small cap companies. You can see usually double tops. They tend to create the beginning, kind of signal the beginning of a downward movement in markets. And so, that's something just to point out from a technical standpoint. Another one that is interesting that I should point out too is the Rolex market is index that shows the Rolex price has been declining. It declined close to 31%. It's remarkable that this chart also looks like the chart of the central bank assets, if you notice. which is down 23%, and this one is down 31%. But these are all signs that the consumer is starting to suffer, right? I mean, who buys these things are usually consumers, and so you should start seeing some problems with consumers in general. This is just one thing. It's not the main thing you should be looking at. Now, a more organic way to sort of measure the health of the consumer is looking at the mortgage rates relative to the risk-free rates. And you can see here, it's basically a way where financial institutions will look into to charge the consumer a premium for the risk that they are taking, what they perceive as risk from the consumer's profile. And usually when you tend to see mortgage rates run much higher than risk-free rates, usually are recessionary periods. We're there today in terms of this. And so, well, it doesn't mean we're in a recession, doesn't mean the consumer is collapsing, but it means that the financial institutions are seeing the risk and are starting to say, okay, well, we got to charge a little bit of a premium because we can see that things can get a little problematic here very quickly. And so they start doing that in order to protect themselves. And this is an organic way to sort of gauge the health of the consumer in the U.S. Okay, I was talking about this, silliness and craziness that we're seeing in markets today. Well, Farcoin to me is a reflection of that. Is clearly the one of the most absurd things I've ever seen in my career. At least back in the early 2000s, companies were actually working on, companies were very overvalued in the tech bubble in the early 2000s. You had all these companies trading at ridiculous multiples in terms of PE ratios and so forth. At least those companies had a goal to get some level of developing a product or a business that would become profitable at some point. And a lot of them became profitable. This, in this case, has no intrinsic value. There's no intrinsic fundamental factor to buying this Farcoin outside of just pure speculation. To me, this is absurd, and it's a good reflection of many years of distortion of risk, and quite frankly, is the most of the less savvy investors, the younger guys that have not really lived through a risky period because of the excess levels of liquidity, and in my view, are due for something really bad in their investment career. And so, I'm a student of history. I'm fairly young, but I'm a student of history, and so I tend to pay attention to things like we're seeing in the screen. This chart to me is, every few years, I should say every few months or so, I work closely, trying to develop charts and ideas and letters and all these themes that we invest in at Crescat. And every now and then I come up with a chart that I like to say these are core charts that we have at Crescat. And mostly because they kind of reflect a lot of our ideas in one single chart. And this is certainly the case here. If you look at this chart, you can see clearly the movements of the dollar. If you just solely look at the DXY index, you cannot see simply those big trends in the dollar. But when you step back and look at 10-year rolling changes of the dollar, you can see clearly that there are big cycles of the currency. And, when it goes up, it tends to inflate certain assets. You tend to see you tend to see the treasury market get inflated. You have equity markets getting inflated. You have the housing market getting inflated. All sorts of assets can actually benefit from a dollar movement. The downward movement, on the other hand, can be the other side of it. It tends to actually create an outflow of dollars that is actually an inflow of the rest of the world that tends to benefit quite significantly. And that's why you tend to see other economies do better than the U.S. economy during periods when the dollar rolls over. This chart to me is classic because the dollar seems to be rolling over. I also think that there's a political effort towards devaluing the dollar. If you listen to Scott Bessent, the new secretary picked for Trump, Treasury Secretary picked for Trump, he mentioned that Trump wants two things. He wants to keep the dollar as a reserve currency, but also weaken the currency. And he said those two things are not mutually exclusive. That is one of the most important sentences I've seen in the last few months. And I do think there's an effort, a political effort towards reducing the strength of the dollar. The dollar has been suffocating the rest of the world. As we see the dollar devaluing, this should create the opposite dynamic, which could be quite positive for other parts of the world. If you think about, okay, as I said, when the dollar goes up, through a cycle of 10 years, 15 years, 20 years, you tend to see some assets get inflated. Which ones are those assets today? Clearly, in this chart is U.S. equities. You're looking at U.S. equities versus global ex-U.S. Performance. And you can see the U.S., it's funny to see people talking about exceptionalism happening now when, if anything, we've seen one of the most exceptional periods of U.S. outperformance relative to the rest of the world in history. This chart is going back to the 1950s, and you can see we've never seen this level of outperformance. I think that as we see the dollar rolling over, we're probably going to see the declining trend, more defined period of a declining trend of this movement that we've seen kind of relentless to the upside. I think that is where the risk lies ahead. And I do think we're going to see the other side of this as we see the dollar starting to move the other way. Now, if you step back and start thinking about narratives and things people talk about, just look at the data itself. Since 2023, where, why did I pick that year? Because ChatGPT was released. We saw this speculation period of AI and the next 7 and all things kind of rekindle in the markets. And you can see on the left side, we're looking at corporate earnings growth. So separated by region or country. So you can see China had the strongest corporate earnings growth of 17%, Europe about 8%, US had the lowest corporate earnings growth, despite the fact that on the right side, you can see the performance of the stock market, where the US had by far the strongest performance of 58%, while Europe had a 28% and China had a 0%. So this is a great example of where you see, just speculation on prices that are not followed by fundamentals actually growing the same degree. This is the chart that I used in the last week, but I still think it's important to sort of point out as we reflect in the year ahead. This is, the problem we're facing today. U.S. market cap right now at about $64 trillion is now higher than the entire rest of the world of about $62 trillion. So this is very problematic in my view, and I do think that we're on the cusp of seeing a big movement on the other side of where non-U.S. equities may actually break out and see a quite significant move to the upside. Okay, now we're seeing another important chart that I view, which is the same rolling change, 10-year change of the DXY in white. The red, you're looking at the relative performance of U.S. versus the rest of the world. Guess what? They have a 0.83 correlation all the way back to 1991. That's one of the highest correlations between two lines that I've seen in the macro world. And what is that? Okay, what does that mean? It means if the dollar rolls over, we're likely to see that the relative performance of the U.S. versus the rest of the world should be actually reduced in a significant way, which is the red line actually falling, not rising more. And I do think that's likely to be the case. You can see that these trends tend to be very pronounced as well. Back in the early 2000s, we did see the dollar peak, and in fact, we did see the rest of the world performing better than the U.S. Emerging markets did very well. Gold did very well. Commodities did very well. Oil did very well. And I think we could see something along those lines today again. Two charts to finish. This is just looking at Brazilian equities. And you can see that, when do you start seeing those signs of things changing? Well, things get so extreme, so cheap, that you start seeing Brazilian equities or companies starting to buy back their shares at very significant levels. This is kind of what you're seeing. Look at the performance on the right side of this table that you're seeing in the bottom there, where you can see the performance of the companies being quite bad outside of one of them year to date, despite the fact they've been buying back shares in a very significant way. And that's extremely positive. That to me just means, the contraction of I guess, an anti-dilution type of policy that we're seeing in places that are being forced to do that, given the fact they're been losing so much value, given that the U.S. dollar has been essentially suffocating these countries in a big way. And I think that's one of the big opportunities for the following years is likely to be Brazil, not just Brazil, but South America overall is one of the parts of the world that I'm very focused. The last chart I want to show is this relationship between value versus growth equities. You tend to see this idea that growth will always outperform value, and it's not true. When you look through our history, this chart's going back 1926. You can see value actually outperform growth for longer than the other way around. And more recently, we've seen this period where growth has been outperforming value, mostly caused by excessive liquidity, in my opinion. But you can see as well that value is extremely cheap relative to growth. This is one of the opportunities that I view for 2025. We've seen some of that rotation happen. If you look at the chart back in 2021, 2022, and then that line came straight down again, now retesting the levels of 2001. I do think we're due for value starting to, or equity investors starting to transition into value stocks once again, as we see this remaining period of higher cost of capital staying in place. And also, the fact that we may see lower fiscal spending and a central bank that is going to be a challenge in this environment as well. Okay, I think Quinton is going right after me, so I'm going to pause my presentation and pass it over to him. Thanks, everybody.
All right. Great job, Tavi. Appreciate the introduction. Look, firstly, Happy New Year to everyone listening here. I gotta say, they say time flies. I woke up this morning, I'm like, holy smokes, we're already 3 days into this year. It feels like it just started. I don't know. Time's moving faster for some reason. Maybe we're in a time warp. I don't know. But we are the 3rd of January into a brand new year. 2024 was what I would call one of the least flashy years in the junior mining sector. It was a tough year, to be blunt. The gold price hit an all-time high. Amazing. Silver was up. It hit nearly $35 an ounce sometime about 3 or 4 months ago. And even base metals, copper, zinc, everything was up this year in general, or last year, I should say. But we didn't see that reflected in exploration companies. And that was a big, big disappointment. A lot of people ask me, why is this? Why did we not see the huge lifts in these mining companies, even big mining companies, quite frankly, that one would expect with these kind of metal prices? I don't have an easy answer other than the costs operating, the costs of producing the metal have also come up alongside the price of these metals. And I think that probably has had the biggest impact on the valuations of a lot of these companies. Well, what does it mean? Look, we're at a critical juncture. In my view, 2025 is really going to have to perform for the mining industry. And what do I mean by that? Well, we got to start seeing capital come back into this space, whether it's investing in mining companies directly, as shareholders, or whether we see money coming in to build new mines and things like this. Whether that money comes from, conventional sources, banks, and others who might lend to mining companies, or whether it even comes from the government. We're starting to see a lot more money coming in from governments around the world, because I think there is a recognition now that humanity cannot live without metals. And it's becoming painfully evident that we haven't done a good job of capitalizing this industry. Okay, but 2025, I think, is going to be a very, very pivotal juncture. I've talked recently about some of the trends I've been noticing. One of the bigger trends is that while the metal prices haven't moved significantly, say in the past 2 or 3 months, really since the election, there is increased competition for metals out there. Okay, and it's largely driven by factors in China. China wants to maintain their manufacturing base, and quite frankly, to do that, They are pursuing metals very, very vigorously. It's all metals: lithium, copper, gold, you name it, silver, zinc, whatever. They're chasing after it, and that's driven the price of concentrates, coming out of mines up. It's driven the metal prices up earlier in 2024, but it's also had a big impact on the price of assets, price of existing mines. We're seeing things now starting to get valued at premiums, if anything. I find that quite interesting. Now, why haven't we seen that in exploration companies yet? I think there's several answers there I could point to, and I'll try to address those as I go through the presentation today. I don't want to harp on this one subject, but I'll try to kind of pull those answers out of some of the topics I'm going to talk about. All right, go to the next slide, please. Okay, just taking a step back, and because this is a new year, just asking some very fundamental questions. One is, why invest in exploration companies? I'm talking about mineral exploration companies. Well, look, there's different ways value can be created. Some of you might have seen bumper stickers that say, if it can't be grown, it has to be mined, things like that. Well, resources, particularly mineral resources, are scarce, okay? And the world only has a finite amount of them, and we've done a pretty good job so far of finding a lot of the easy pickings. Well, things are getting tougher and tougher, but that's why a new mineral deposit, a new discovery, can create value. I mean, think about it. There's not too many things out there that we can do. Yeah, we can invent new technology or a new GPU or CPU or whatever, like NVIDIA or something like this. But finding metal in the ground where there was never a recognition of a resource before, that can create value. Okay, it's not a printing press. It's actually creating value by discovery. And that's why we take a fundamental view towards this particular niche, this suite of around 2,000 listed exploration companies in the Canadian and U.S. markets. And then there's probably another, say, 1,500 around the world. Besides that, some are in Australia, some are in London, elsewhere, Johannesburg, so forth and so on. There's little companies all over the place. Now, what is an exploration company? Well, it's a company that's focused on making these discoveries. Now, they seldom make a discovery and actually successfully develop their own mine. That's a known fact. Okay, very few, really just a precious few, have actually successfully done that. Okay, most exploration companies are in it because they want to make a discovery that's going to be bought out by a larger mining company. That's the game. That is their product. They want to make a discovery that's going to be desirable to a major mining company. Yeah, there are exceptions. I mean, if you look way back in history, say mid-1980s, you could point to Barrick. Most people don't know a lot about the history of Barrick, but Barrick, before it found Goldstrike, or was, acquired the Goldstrike property and made the discovery of the Post-Betsy deposit, it was operating a little tiny gold mine in Utah, and quite frankly, it wasn't making all that much money, if any money. It was called Mercer. That was their flagship at the time. And guess what? They went out. I would call them an exploration company, even though they were mining. They went out to explore, and they picked up Goldstrike property right on the Carlin Trend. Ended up making what is really the biggest single discovery, in terms of a gold deposit in modern history. Okay, it ended up being something like 56 million ounces of gold. Was split between Barrick and Newmont, but still, it really made Barrick what it is. Okay, so there are exceptions. Okay, I'm not saying that there aren't discoveries that have been made that result in companies becoming producers and kind of becoming successful in development of their own mine, but it's pretty rare. Okay, most of these explorers are looking for deposits that are going to be desirable for acquisition by a mining company, a larger mining company. Okay, now you might say, well, gee, why aren't exploration companies valued all that highly today? I think while we've seen some very focused acquisitions in the past year or two, I would say we're not seeing anything like we saw, say, in the 2006, 7, 8 period, or even the 2010, 11, 12 period, where there was just one after another. It seemed like every other day you would wake up and there was somebody acquiring somebody else. We're not seeing just a huge frenzy like that. Okay. And that's partly because the larger miners right now are a little gun shy about picking up other companies, especially having to pay exorbitant premiums. Most large mining companies, they don't have the vision. They don't have the chutzpah to go out and acquire explorers like they once did. I think that's a shame, because it's a testament to the lack of vision that we're seeing in the mining industry overall right now. Now, the two bullets at the bottom there. Much of the time, an explorer must carry the ball down the field before being bought. Okay, now this is one of the big challenges of an exploration company. I can't just paint it like, oh, they make a discovery and everybody gets wealthy and da da da. No, it actually can be very challenging to make a discovery. What do I mean? Well, once you make a discovery, you have to drill it out. Okay, that means drilling lots and lots of drill holes. Lots of money has to be spent. That means raising a lot of money. It's basically a process, and it might take a year or 2 or 3 for a company to fully drill out a deposit to a level that it can then go under economic study. Okay, then the company has to decide, well, okay, nobody's bought us yet, so what do? Well, most companies opt to go ahead and put the deposit they've found or they've delineated through economic study. In other words, they're carrying it down the field. They're trying to improve the asset so that it makes it more and more desirable. There's other aspects of this. Maybe they cut deals with the Aboriginals in the area to make it easier. In other words, they try to work out the social license aspects of projects and things like this. Maybe they go through permitting processes that make it easier for somebody to make a decision. Maybe they start putting in some infrastructure even that makes it easier for somebody to make a decision. But all of these things are basically hard yards that the company has to do once it's made that discovery. Okay, and everybody needs to listen to this, because that is why we see a peak in a Lassonde curve and then it comes off. Once the hard yards begin, they have to carry the ball. Okay, now carrying a discovery forward through to development can be challenging, and I'll talk about some of those challenges as I go through upcoming slides here. It's not impossible, and a lot of deposits are absolutely world class. They're great discoveries that are going to make great mines, but any deposit has to go through those steps, those processes that I just talked about. And so a little junior company, if you have to carry that football down the field, you can find yourself having to raise money in a market that's tough, like right now, for items that we'll say aren't going to provide immediate return to shareholders. It's the way this works. All right, but let's go to the next slide and talk about the strategy that we employ. And we are focused on the far left-hand side of the Lassonde curve. Okay, I want to make that very clear. Most of our investments, not all, but most of our investments are focused on the left-hand side. So we're looking at exploration companies that are going to go out and try to make this discovery and create value. What are the criteria that we use for choosing explorer? Well, jurisdiction. Okay, the first question I have for any company or any project I look at, if they come to me, is, has a mine been built recently within, say, 100 kilometers of that site? If I don't see any evidence that mines have been built, that there's a history of actually creating mines out of discoveries, then I tend to lose interest very quickly. Okay, I'm not saying that's the absolute, but it's pretty close. That's one of my golden rules. Have to be in a jurisdiction where mines can get built. Okay, geology. This is a bit vague for most people, but the question is simple: is the geology conducive for discovery of a large mineral deposit? Look, I don't like to look at companies that have like little, small scale potential, for discovery. I like to look at companies that come to me and they say, we have an idea that could result in a discovery for a very large deposit. Well, show me the goods. Okay, what do I ask them? I say, what kind of geologic information do you have? So they, show me whatever mapping and stuff they've done. It's funny. I got to say, the art of mapping has really diminished over the years. I find that one of the biggest explanations for lack of discovery is that we are not creating geologists who can go out and map rocks in the field. That is worrisome. I've had many discussions with many people over this topic over time. But I like companies that come to me and they have a very clear understanding of the geology, the framework of the area, like what faulting and rocks underlie the area and why there would be a big mineral deposits there. Do they have geochemistry data geochemical data that supports this? That's a very big part. If it's stream sediments or soils or whatever, rock chip stems, I like to look at those elements too. I like to look at whatever geophysics they have as well. Okay, might be electrical techniques or gravity or magnetics or whatever. There's a lot of different techniques out there, but I like to see evidence, geological evidence that there is potential for discovering a large mineral deposit. Okay, now next, the property itself. Does the exploration company have a commanding land position over their property, their target? Okay, some companies have little postage stamps. Drives me nuts. I look at the company or their deck and I'm thinking, okay, this looks great, except they only have like 2% of the area, or even if they have 40% of the area or something. But in other words, they have part of the picture. And I like to see companies that have all of the picture. Okay. So I put preference on those that have a very cohesive land package. Technical team, is the technical team capable of developing and executing an exploration program? It's very simple. I like to see companies that have those people in place. If you don't, you're not going to get the work done. Okay. Now, some companies might not have a fully fleshed out team because they don't have the money. They don't have the resources for whatever reason. The other question I ask is, are they willing to take advice? If I say, hey, you don't have a good geochemist here, I know somebody that can come in and do that work for you. Are they open to bring in other people, other expertise to help them? Okay, so that's another important part. Now, management. Firstly, is management aligned with the shareholders? Are they a shareholder themselves? How big of a shareholder? Things like that. Capable of working hard to attract new investors. Look, there's some people, and Kevin, Tavi, and I talk about this frequently, that work their tail end off to go out, market, do a good job. There's others that just don't seem to want to go out and do that. And unfortunately, sometimes we learn through experience. Okay, it's not an easy thing to assess early on in many companies, but over time you can see, yeah, that guy's working their tail off. That guy over there's not quite doing much. That becomes a problem for us, and we've had many discussions. Believe me, if you don't have somebody out there telling the story, getting in front of people, it really just can't pull in new investors. Okay, it's that simple. All right, the other thing I'd like to see is a management that's committed to stick with the thesis. What does this mean? Okay, look, when we interview companies and I talk with them, we basically collectively talk about a focus. Okay, companies that are focused succeed. If they have 10 properties and they're going to spend a little money here and a little money there and a little money there, oftentimes it doesn't work. I mean, that like 99% of the time, that's a disaster. But if they have a very clear focus, i.e. they have a target, a property, a geologic thesis that basically could point to discovery, lead to a discovery, those are the ones I want to find and stick with. And as long as the management sticks with, great. Okay. But there are times we've invested in companies and for whatever reason, they wandered off into the weeds. And unfortunately, we tend to pull out of those companies over time. It's just the way it is. Share structure. Look, one of the things we look at is the valuation of the company at the time we're assessing taking an investment in that company, as well as makeup of the shareholder base, like who's in it, who's got what, management included, and what's the kind of the future for this company. There are some cases where we came in a bit later into a story, and I'll tell you from experience, those are the ones often that we do struggle with because there's a lot of shareholders, a lot of legacy in that company already. And some of those people, even if we kind of, the company starts doing the right thing and gets going, it can have a lot of inertia because there's a lot of people who were in very early at a cheap level who want to get out. And oftentimes you just have to see that cleansing of the company. In other words, those early cheap, weak hands have to leave before the company can pick up. I think we saw that with an example of Sitka, for example. Sitka kind of hovered around 16, 20 cents. It seemed like forever. And then they finally started to see, some movement of people out of the stock. And then it started to appreciate. Those are things that can be painful at times, quite frankly, but they're real. And, it's something we factor in. Now, are we perfect at any of these? No, but these are our criteria. And these are some of the ways, some of the metrics we use to rate and rank our, spreadsheet, our activist spreadsheet. All right, let's go to the next slide. Now, what I want to do is I want to look ahead. It's about 20, 25 companies. I can't remember. I told Kevin I'd keep this short. I'm going to have to put my rocket skates on here or something because I'm going along. Sorry. But I want to take a look ahead at what might be in store for 2025. Okay. In doing this, you can see the disclosure at the bottom. This is me just blah, 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 blah. Okay. I don't know if any of this is going to come to fruition or not. Okay. Just my disclaimer for the day. But I'm going to look at some of our companies, some of the investments we have, and I'm going to kind of talk about where they're at, in other words, what they accomplished in 24, but also look ahead at early part of 25 on into latter part of 25. Where is the company going and where do I hope they go? Okay. And look, I know a lot of companies listen to these videos. I don't know why, but people sometimes listen to our videos and then they say, you know what, that might be a strategy we should pursue sometimes, let's go to the next slide. We're going to start with Snowline. Look, I give Snowline very high rankings in terms of their overall strategy, management, et cetera, et cetera, et cetera. They've done a great job. They put out a resource in 2024. Great start, 7.3 million ounces if memory serves. Pretty good grades too. Like the weighted average grades, just around 1.5 grams, something like that. Well, what have they done since? Well, they've come back and they've done very strategic, well thought out, executed infill drilling to basically take their resource, expand it a bit. I do think we'll see in 2025, I think we'll see an expansion of the resource base. But I also think that we're going to see an overall improvement in the confidence level of the resource base. Very focused approach. And I love it. Okay, now other things they've done recently, they've been talking about infrastructure. Note that recently they talked about the fact that road network is going to be put in here into this area very soon. Okay, it's tied to one of their neighboring companies. But then they also announced that they're bringing on people who know how to advance a project into the development stage. Now, a lot of people say, oh, gee, that's a bit daunting. Are they going to be, go like that? I can't tell you 100%, but my gut is, no, I think they'll do quite well. This is an exceptional deposit. Like if you rate this in terms of its discovery and quality, I think most geologists around the world would rate this extremely high. This is a very continuous, consistent ore body. It's got great metallurgy. It's got other aspects. It is remote. It's going to have to be developed, but it looks like roads are going into this region. So that's great. But what is the company doing now? They need to advance this thing through the basic steps of permitting and also, starting to look at how this thing could be developed. I think that's a good move. And I think, if anything, Snowline might be one of these unicorns that actually could make it to the production stage. Sounds crazy, but for a junior company these days to achieve that. But I think this deposit, if there's anyone out there on the planet right now that could make a company, it's this one right here. Okay. So I think Snowline's a winner. I'm not too worried about them. I think they'll do well. They got 43 million or something in the bank. That's fantastic. Go to the next slide. Okay, Sitka. This is the one I mentioned a bit earlier. Look, they are also in the Yukon like Snowline, and they're part of this Tombstone Belt, this Tintina Belt with reduced intrusive deposits. Where's Sitka today? Look, they focused on a very discrete part of their original property, this RC property, and they focused on the Blackjack and Eiger zones, where they drilled up a small resource, a couple of years ago. But now they made this kind of quantum leap. They bolted on the Clear Creek property onto their ground in 2024. But what does that mean? Well, now they have the entire, basically, call it the full palette, if you will. Like I said, I like companies that have the full land package. They have the land package that encompasses all of the reduced intrusives in this neighborhood now. Okay, and that means they can go out and start sharpshooting and drilling many of these new targets. And I think that's critical, because I think they're going to start to see more discoveries, but also critical mass growth. I think this is a company that has just huge potential to make further discovery in 2025. They also have a half decent treasure at this point. I think they got somewhere on the order of 10 million. Don't quote me, I don't remember, but something like that. And they announced recently that they're going to be very aggressive with drilling this year. I love that. I think they're on the right track. Go to the next slide. Rackla. Okay, Rackla's been poking around in the Tombstone Belt for 2 years now. They had some great targets. They were mostly targets defined by superficial geochemistry and more, data that was more peripheral, or not directly linked to an underlying ore body. In other words, soils or till sampling, and then geologic concepts about a buried intrusion and things like this, some geophysical evidence. Now they have with their new discovery on the Yukon or Northwest Territory side, they have in outcrop channel samples that are running very nicely in gold and bismuth, thorium, things like that. In other words, they've made what I would say is an outcrop discovery through the channel sampling they did late in the year. So I'm very hopeful that Rackla is now on the right track to get in there this year and drill and make what could be yet another major reduced intrusive gold discovery in this prolific belt. By the way, I'm going to have, I think, a webinar with the Tombstone companies sometime in mid-January. So stay tuned. I'm going to try to do that with all these companies. All right, go to the next slide. Okay, Tectonic is like at the far end of the belt, the same belt really, but it's in Alaska. It's way over on the west side of the Kuskokwim Fault, which is one of the big structures that kind of bisects the whole belt. They are over chasing a reduced intrusive system on the west end of what is really the continuation of the Tombstone Belt across Yukon and Alaska. They haven't released results yet. Okay, they drilled up through, I think, late October, early November. We haven't seen results. I'm hoping to hear out of the company why we haven't seen any yet. I think there's some hangups with labs, and unfortunately, I think I know what those might be coming from. I'm not going to say that labs are exclusively the problem, but labs are still a problem. When the market goes to heck, labs tend to underperform. And this might be the case here, but I do think we'll see in early 2025 some numbers come out of the company. I hope they're good. Okay, if the company releases good results over the drill holes that they drilled in 2024, it should show, as long as the results are there, it should show that there's a much bigger gold system here. They drilled a lot of holes over what I'll call far field approach, where they tested many different targets across the property. I think that's a good move, because if they come back with strong results in multiple areas, it won't take a lot of brain cells to say, I think there could be a mega discovery here. Let's hope we're that lucky. If the company does release strong results over the next few weeks, then I want to see it get momentum, but I also want to see it focus on getting the resources it needs to do an aggressive program next year. Okay, or I should say this year. We're already 2025. Go to the next slide. Okay, Newfound. Look, the company has been drilling now for, let me think about this, 4 years. 4 years in Newfoundland, drilled many hundreds of thousands of meters, had fantastic results, made multiple high-grade discoveries. But I think they are now at a stage, and they're trying to kind of reset themselves as a developer, like a company that could go into production. Now, what I say this, well, they recently brought on Paul Hewitt, who's now their chairman, well-known developer. This guy's as solid as a rock, and I think he's going to steer him in the direction of taking this project forward. Now, what is the challenge with this particular deposit? It's got great results. Gold clearly is there, very high grade in places. But these high grade deposits are a challenge. They're structurally complex. They're very complex to model, to put a resource around, even with a lot of drilling. Okay, you have to drill things like this on a 5 or 10 meter spacing, like very, very closely, so you can start to connect everything together to fully understand it. The company, while it's kind of there, it's not there across the whole spectrum of discoveries it's made. It needs to pick an area like the Keat Zone and focus like a laser on developing that first, whatever, million ounces, million and I don't know, whatever, find an area and say, okay, we're going to build a mine around that, knowing full well there's lots more around us. Okay, we're going to build a mine here. We're going to get this thing into production, start cash flowing, and then we'll go chasing the rest of these out of cash flow. It's the organic way. It's the old school way that we used to develop mines way back in the 80s and 90s and stuff. We need to get back to that. And I think Newfound's starting to head in that direction. Okay, go to the next slide. Goliath. Goliath has been drilling for 3 years. Now, they have an absolute ocean of results coming back soon. I do think that they're also experiencing the same lab challenge that Tectonic is. But I think given the results we've seen here recently, I think there'll be some very, very strong results. We know there's lots of visible gold in many of the intercepts, and I think we're going to see some really good numbers, particularly out of this Bonanza ledge. The Bonanza ledge, which is kind of the deeper and more flat-lying ledge that was discovered, was actually discovered last year, but is drilled more thoroughly this year, is turning out to be maybe the real meat of this system. It's kind of the high-grade component of this system. I think the company's probably going to have to do some more drilling this year to fully flesh out that, but I think that Bonanza Zone is well worth it. This could be one of the most remarkable high-grade discoveries in a long, long time. And I really want to see this company get these numbers out, start telling that story more clearly about, not that they're doing a bad job, just I think when the numbers come back and they have a better picture they can put in front of people, I think the market will understand this. I think analysts will understand this. I think a lot of really smart people start jumping in. Even big mining companies will start recognizing that this could be just a killer high-grade discovery. Like one of these discoveries that you just don't see too often these days. High-grade, metallurgically friendly, probably easy to access because it's above the valley floor. You can put an adit in, get to this thing, no problem. This thing's got a lot going for it. I think we're going to see a lot of big steps, maybe even talking about building an adit to access the underground, like access the deposit from underground sometime this year. I don't know, but that's my future. I think they're going to have some great results. They're going to have to drill some more, get some more great results from Bonanza in particular. But I also think the company's going to start talking about how they're going to, put an exploration adit or something like this in. Go to the next slide. El Oro. Okay. Look, El Oro is now infill drilling. They raised a bit of money late last year, and they have enough money they can get in and infill, and they're doing that. Okay, they're doing it. They're doing more like 50-meter centers in that Santa Barbara area. I think this is the right step. Okay, the company is going to have, in my view, a long string of very good results over the next few weeks, few months, whatever, as they do this infill drilling. But the beauty of it is they're targeting an area that could deliver a much higher confidence resource, but perhaps also much higher grade resource. You remember with wide space drilling, the computer can't quite discern what the grades are in those broad areas in between drill holes. When you start putting holes in between, then the computer says, yep, the whole shebang looks more continuous, more in better grade. Those are the things that are going to come out of this program. I'm very confident. Okay, so I'm gung-ho to see El Oro pursue that. Why? Because if they can put together a kind of call it starter pit resource, then they can take that through economic study. And knowing San Cristobal, history there. These are the kind of deposits that they're very rare to come by. Okay, they're potentially world class silver polymetallic deposits that don't pop up every day. So I'm just gung ho about El Oro, especially going into a strong silver market. I think this story can come roaring back as we see some of the results come out of their infill drilling. Go to the next slide. Barksdale. Okay, right before Christmas, my good friend Alan Roberts managed to get a hole down in just onto the west side of the property boundary from Taylor and also the Peak deposit. He managed to get a hole down into the right stratigraphy at depth, and we saw great sulfides. Okay, do we have assays back yet? Nope, not yet. We should soon. Okay, labs are on break over the holidays. Yeah, it's the way it is. But I would say sometime in January, I hope that we'll see some numbers back and we can talk about what we actually have discovered here. I think it's a big step, because if we see good results, in other words, if we can demonstrate that Taylor extension comes onto our ground and that Peak extension also comes onto our ground, basically we see this kind of almost hybrid type geology take shape. This, call it lead zinc silver type mineralization from Taylor, but also this copper mineralization coming in from Peak. This thing could have a wonderful outcome. I think this could be the year that Barksdale really pulls a rabbit out of their hat and gets back in the saddle here. Okay, let's go to the next slide. Okay, Kingfisher. Look, Dustin is one of these guys who works his tail off, and I respect that. Okay, and the guy's done a fantastic job. He recognized that the previous property he had, Cloudrifter, was not delivering the goods. Okay, a lot of guys just go, "Oh, that's it. I'm going to go work for a tech company or go sell shoes or whatever." Not Dustin. Okay, Dustin went, okay, I'm gonna pull off something even bigger and more interesting. And what he did is he set up shop in the Golden Triangle, coming up to the north part of the Golden Triangle, and started bolting land together. And he's now put together an incredible land package right in the heart of the northern part of the Golden Triangle, where we know there's just heaps and heaps of discoveries and deposits very nearby. Major mining companies, Newmont Tech, right in the neighborhood. He's managed to pull this off right under everybody's nose. And I really think this company has a good future. I think they're going to have to do hard work to raise money and get it going. But going into a good market, I think this is an incredible copper gold story that people are going to really pay attention to. Go to the next slide. Hannon Metals. Okay, Hannon, they talk about grassroots discovery. They're on the east side of the Andes down in Peru. And through blood sampling, which, I right before COVID, this was the last site visit I made, was to Eastern Andes in Peru with Hannon. I showed the crew there how to do blood sampling. And guess what? During COVID, that's what they did. They did blood sampling. And they came up with amazing discovery, okay, of a new porphyry belt. And now they have drill permitting. They've advanced geophysics, geochemistry, everything that one needs to do to develop targets, and they have them. And they've now got their drill permit. So we're going to see them start to test some of these copper gold porphyry targets. But they also made this discovery, this Provisto target, which is a gold target. It's a bit different. Okay, it's an alkaline gold target. Absolutely huge. It's like 25 square kilometers. When I see a district scale thing like that, and it's greenfield, guys, there's no history of mining. There's no history of prospecting, locals, nobody, nothing, guys, nothing. But when I see them show a big anomaly through geochemistry like that, that gets my attention. Okay, it's a new area. It kind of breaks my rule about, I like to see jurisdiction. Well, this is a new jurisdiction, kind of, but it is Peru. And I think this year they're going to make great strides to move in Provisto into the direction of drill permitting too. Okay, so Hannon is going to be, I think, a very hot exploration story over this coming year. Okay, let's go to the next slide. Sorry, I got to get a drink here. Okay, Magotes. Magotes is immediately south and adjacent to Filo. Filo was just bought out by Lundin and BHP for $4 squillion. And now Magotes is chasing the rest of the belt, that porphyry copper gold belt. And they've done an exceptional job putting land together. I think with their technical team, I think they are set to make discovery this year. They're doing trenching work and surface work before they go drilling. It is just summer down there. Like it's getting in like maybe a month into summer now. And they got a few months left, but I think the company is on the right track. We're going to see a lot of news out of them with regard to trenching and trench results, soils and stuff like that. But we'll also see some drilling come later, maybe over the months of, February, March, April, May, something like that. This is an exciting story right next to one of the highest, dollar acquisitions in modern mining history. Okay. What's not to like? They got the goods. They got a neighbor that sold for $4 billion. Let's stay tuned. Let's go to the next slide. SK, late last year, SK made a discovery of new high-grade mineralization towards the south end of the property. I know the company still has a decent treasury, somewhere around in the order of $2 million left. So that means they have enough money to get back on the ground. And I'm going to say the company's going to go in there and start following up on that exciting high-grade discovery they made towards the end of the season. It was kind of a first test or first kick of the can in that southern area. We knew from blood sampling there was a lot of gold down there. I think we're going to get back in and follow up on that, and maybe even come up with drill targets. Maybe SK will kind of go through this rejuvenation, like the Phoenix, so to speak, where like in 2020, we pulled together some really nice drill targets of that high grade and get back in and drill some holes. All right, next slide. Condor. Okay, it's got 3 projects that are potentially going to be drilled this year. Realize that the patience needed to get permits in Peru can be painful at times, but it does seem like they're making progress. Okay, they've got permitting going at Pucamayao, in particular in the southeast part of that target. It's an area I like a lot. I'm very anxious to see those permits come through. They've also got the Huaynac Punta permits in the works, and I think we're going to see ability to drill that maybe even as soon as late Q1 of this year. But then they also have the venture with Teck at Cobre Orco. And that one, if Teck gets the permits to drill there, that could be a 3rd drill target that Condor has for this coming year. In other words, I think Condor is on a track where this year it could be an exciting exploration story. Each of those targets is, in my view, a very, very rich prize that could, be each one of them on their own right could be a major discovery. All right. So the company's out swinging for the fence. My good friend Everett Marquez likes to look for big things like I do. And he's got 3 of them here. All right, let's go to the next slide. Western Alaska. Look, a lot of people say, gee, they didn't hit the home run in 2024. They had some sniffs and pops and whistles. But in my view, they were a little more than that. Okay, when you're seeing a drill hole kind of basically between Water Pump Creek and Illinois Creek, that's hitting, even though it's a narrow interval, but hitting the same kind of grades, to me, that's confirmation the 2 are connected. Yeah, they need to do more drilling to find the deposit there, like find the volumes of mineralization. But they found, meter or 2 of very high grade that looks a lot like what you see at either end of the spectrum. Okay, so basically, I think they've confirmed their thesis. Now they got to do the hard yards to get in and test further with drilling, test those intervening areas to show this is a very large CRD system. I think to pull it off, got a very, very smart team. I think they've got the goods. Okay, let's go to the next slide. Novo. Okay, Novo has gone through a bit of a redo here recently in terms of raising some money through the sale of some equities that it held, and that helped. It raised about 11 million Australian, which puts the company in a really good position to go out and tackle 3 new projects that it acquired in the month, I think November and early December. The announcements were made. I'm director, I'm also director of Condor and Barksdale. Forgot to mention that earlier. Sorry, guys. I'm a director of Novo as well.
And SK, right? Quinton?
SK, geez. Yeah, thank you, Kevin. Keep me on track. Yes. Anyway, Novo has picked up 3 new projects, and I think they're very high quality. One is called John Bull. It's over in northeast New South Wales. It is a reduced intrusive type gold system, much like those that you see in the Yukon. a lot of people aren't aware, but the eastern side of Australia has a number of these reduced intrusive targets. And I think John Bull looks every bit as exciting. The soils and stuff that I've seen say that this is a really big gold system. It's got all the right bells and whistles, the gold, bismuth, tellurium, everything you'd like to see in a reduced intrusive. And we're going to test it. It's got a very clear path to get a drill in and test it. We've also acquired the assets from Manhattan up in the northwest corner of New South Wales. Why do I like that? Because the veins there, texturally and grade-wise, look a lot like an epizonal gold system. Manhattan drilled fairly wide-spaced holes in there, and they hit occasional high grade, but they didn't go in and do the real close-spaced drilling like I talked about earlier that you need to do with high-grade systems like that. But I think we can go in there and we can kind of ferret out the really high-grade system that I think is present there. It's got all the right bells and whistles. You've got antimony, like you see, say at Fosterville or something like this. It's one of those things that just gives me spidey, tingly senses that there could be something big. And then this Onslow project, which is way off in the northwest part of Western Australia, it looks like a gigantic IOCG system that has basically never been recognized previously. We've got a huge land position over it, and we don't quite know what it is yet. Like I can't say, 100%, but I am going to go down there before we drill it. I'll be down in May or early June. And my team right now is very convinced that that's a big copper gold, maybe IOCG-like system that's ripe for exploration. I think, I like district scale things, and that's definitely one of them. So NOAA's got cash. It's got 3 good projects, and it's back on track to become kind of rejuvenate itself as an explorer. All right, next slide. Electrum discovery. I've talked about Electrum a few times now. They are in Serbia. They're the ones that are near the Bor deposit, the Timok district. This is, basically my bet, my hope is they make a reservoir minerals type discovery. Okay, when reservoir hit Chukari Peki, I believe is how you pronounce it, which is not too far from this actual project. They went, hockey stick like in share valuation. Okay, I'm hoping Electrum has the same luck. They basically have done a good job with the geophysics, the geochemistry, and defining the target. They have a good sense of the depth and where they're at in the system. And I think this could be one of the most exciting discovery stories, hopefully, once they start drilling, that we've seen in a while. Now, guaranteed? No, there's no guarantees in life, but this is one of the ones that I'm excited about, and I hope it delivers. Okay, let's go to the next slide. Altamira. Look, Michael has been busting, and his team have been busting, but kind of deciphering the geology of the subsurface across his flagship property in Brazil. Okay, now they drilled Maria Bonita back in, I think it was the first part of this year, or last year, getting all mixed up. And they had some more strong results, not huge killer results, but we're talking like gram type grades over long intervals in a reduced intrusive type system. And this is really a brand new district in my view. Now, what have they done since then? They've actually gone out and done soils, but also dug trenches across areas where they're starting to see more anomalism, and they're finding just one porphyry after another underneath this cover across this property. And I think we could see something absolutely phenomenal out of Altamira. They do need to get some money, I think, to get in and drill, but this is starting to take the shape, kind of like Sitka, for example. I think they got the whole cow, upside down cow, so to speak. All right, go to the next slide. I know I'm going long, Kevin. I apologize. It's not an easy thing. All right, inflection. Inflection has, in my view, one of the best deals a junior has with a major mining company, where Anglo Gold is basically coming in and spending a large sum of money across their portfolio, but then going to advance certain projects within that portfolio. And in this Duck Creek area, I'm going to make a prediction. I think sometime this year we're all going to wake up and be like, "Holy smokes, they hit it!" I really hope that happens this year. I just hope one day we all wake up and we find out they hit the smoking long interval of copper gold, like Cadia, for example, which is in the same belt. in this subsurface blind target environment that they're testing. If it's not at Duck Creek, maybe one of the other targets. I don't know, but it's one of these stories that I just have a feeling someday we're going to wake up and be pleasantly surprised. I just hope that's the case in 2025. No guarantees, but hey, that's my view. Let's go to the next slide. BCM. This is one company where I cannot think of too many companies that have a discovery hole and are just, I shouldn't say that, but they're basically kind of dead in the water. I mean, that's the fact. Okay, they hit 150 odd meters of what was about 0.85% copper equivalent back in mid 2023. Okay, here we are 18 months later, or maybe even more than that now, and they haven't been able to really follow up on that. Okay, why? The company doesn't have money. The market's been terrible, and the whole momentum behind their stock and everything went pear-shaped. It's a shame. Okay, I have funded a student at School of Mines and his professor to go out there and do detailed work of this discovery. And I'm telling you, there's very few things on this planet that I'm so compelled about that if they drill to the southwest from that hole number 8, where they made that discovery, I think they're going to find something big. Okay, I really, really, really do. It's one of my strongest conviction stories in terms of discovery that's out there. Sergey is no dummy. He's one of the smartest geologists I've ever seen. He found Oyu Tolgoi in Mongolia. The guy knows what he's doing. And if the company could just get some more resources and get in there, I think this is one that can deliver something big. Okay, hopefully that happens in 2025. Let's go to the next slide. Silver 47. Okay, this is the company that's picked up. They started with the Michelle project in the Yukon, and because of permitting issues, they could not advance that. So they went out and they picked up the Red Mountain project from White Rock Minerals, which was an Australian company. This is over in Alaska. It is a VMS district. They came in 2024, drilled a few holes, not a lot, but a few holes, and actually stepped out and infilled some areas at Dry Creek and West Tundra Flats to help build continuity and confidence around the resource. They're there. They're high grade. This is an absolutely killer VMS camp. They've got the whole thing, got a great big whacking land position. This is one of the best silver stories I know of that's not fully recognized in the market yet. I would just love to see the company get the cash it needs so that it can get in there and, like, say, Western Alaska, be very aggressive and meticulous about drill testing these for extensions of these known deposits, but also this just absolute enormous inventory of high quality targets that are scattered across the property. I think it is one of the best silver stories, best kept secrets, shall we say, in the silver world. Let's go to the next slide. I'm getting there. Okay, Brixton. Brixton is at a very pivotal juncture. Okay, Camp Creek, they've got enough drilling down there. I think, quite frankly, they could put a resource together. Is that their plan? I don't know. I wouldn't be surprised, though, if we see something in 2025 to that effect. Maybe it's a early, high-level, inferred resource or something like this. I don't know. But they've got us. They got BHP as a backer, a 20% shareholder in the company. Now, what might happen? Like, this is a hard one to guess. Okay, they need more money to drill. There's no question. But maybe they figure something out to do something at the asset level. Maybe BHP says, you know what, we see enough size to this thing. We're willing to start spending the money ourselves and take it on. I think that could potentially be a very good outcome for the company and shareholders to prevent further dilution. And I'm kind of throwing this out there because I hope the company kind of moves in this sort of direction. All right, go to the next slide. Irving. Look, Irving has two really nice projects in Japan. The Omu project in Hokkaido, northern Hokkaido, as well as the Yamagana project in Kyushu, which is the south end of the country. Guess what? We're drilling now. And quite frankly, Newmont's spending most of the money, and Newmont and Sumitomo are spending most of the money. We spent the early money. They're spending money now, and we're drilling holes at Yamagana. It's a bit slow and it's a bit tedious, but I think the company is on the right track to drill test. They got the geophysics. They got everything they need to test these high-grade vein extensions out of the Yamagana district under this blind covered area. And I think this year could be the year that those veins are encountered, and we can see, there's a potential Hishikari type system right under our nose there on the Yamagana project. Now, what's really exciting in my view is this deal that we've cut with JX, and I'm a director. Sorry, get that in there. Sorry. Deal that we cut with JX Mining. Most people do not know this. JX is the largest mining house in Japan, and we have struck a deal with them to basically invite them in to help us move Omu into becoming a smelter flux operation. Yes, we got a huge volume of siliceous sinter that could probably be excavated very easily and used for smelter flux, but we also have a lot of high-grade veins that we know of at Omui, for example, that also could be added to that as smelter flux. In other words, we're starting to see the big mining companies in Japan, JX in this case, take note of what we've been doing and say, gee, maybe this is a good entry point. With their help, do I think we could build something in Japan, like a smelter flux operation? Absolutely. This is what we've been dreaming of. And I really hope that this ultimately leads to revitalization of the gold mining industry in Japan. They have the one mine, Hishikari, but we're trying to find more ones. All right, go to the next slide. Core. This company is actually not that far from Brixton, and they probably have a porphyry underneath them, kind of like Camp Creek, like Brixton is found. They've been drilling the CRD for the most part over the past couple of years, which is in a more shallow environment. They've had some phenomenal results. I think one of the longest, highest grade intervals that they've encountered to date was just released within the past month or so. But the problem is the market is not there to fund these kind of stories right now. Does it mean the project's bad or the geologists are bad or something? No, they've done a great job. They've found the right stuff. What we need to see is the market come back and people, especially mining companies, take note of a discovery like this. I would love to see Core strike a deal, hopefully with a major mining company, to come in and help them do the hard yards to get this project moving again. Okay, it's a discovery. It's basically been demonstrated. There's also likely a porphyry down there at depth, and you need a lot of horsepower to tackle something like that. But are there companies out there? Yes, there's big companies, RTZ, BHP, you name it, who are looking for big copper stories. Okay, and Core has that kind of property. Let's go to the next slide. I think this is I got two more. Sorry, Copper Core. Copper Core is in Tasmania near the Mount Lyell deposit. They drilled a target here recently, and the name just flew out of my head, which is what happens when I get older. Sorry, but it's right next to Mount Lyell, basically. Seeing the same geology, the same grades. And we know Mount Lyell is a big system. It's like 3 million tons of copper, 3 million ounces of gold. And here they are finding basically the same style of mineralization on the ground adjacent. And they're also have just a big geophysical belt of targets that are quite similar to Mount Lyell. I like this company. They're doing meticulous scientific good science and finding stuff. A lot of people want instant gratification. And sometimes a little slow to come, but they're on the right track. I think they're going to make a discovery here. Go to the next slide. And then the last one, I think this is it. Alpha Exploration. This is in Eritrea. Berna is their gold project. That's where they're focused right now. They had a very good string of results in the latter half of last year. I think they still have pretty good cash and support from a lot of their bigger shareholders. I think they brought in some very strategic funds and stuff here recently. And this is one company where I can say this. Not only do they have a strong technical team, they got strong management too. Berhani works as absolute tush off trying to support this company. And that's what we respect. Okay. They got great geology, great technical team advancing it, but they got great management who's done a good job of helping this company, find the money it needs, advance its story without just going into delusionary oblivion. Okay. I think that's it. Go to the next slide. That might be it. Sorry, Kevin, I went way over. Darn it.
All good. Worth the extra time for sure. So thanks, Quinton. We have this incredible activist metals portfolio that we've built. really over the last 4 years with Quinton's guidance, and it's it's been a rough period over the last couple of years, really, for these exploration companies, for the whole exploration industry. Even as gold has broken out recently and silver is moving up, a lot of the exploration companies, even the ones with big bona fide, highly economic new discoveries, have been having trouble, raising the capital that they need to advance these projects, doing the additional hard yards that they need to do, and it's simply a function of the marketplace, mostly. I mean, Quinton said it, for there's also rising costs. I mean, that's a part of it, for sure. But like Quinton said in one of his first slides, the value that we can create by making discoveries is really the reason that we're doing this. And there is a lot of value that we can create for those who want to learn more about why we think our portfolio is so deeply undervalued, why we think it has substantial appreciation potential. We can't talk about that in these public forums. We can't talk about hypothetical performance, but for accredited investors who want to learn more, we encourage you to reach out so we can go through the portfolio with you and let you know what we think it's worth and why it's so undervalued today. So this is, we do believe there is some vindication coming for this entire exploration segment of the market. I think 2025 could be the year, and we're really excited about that. So if you're interested in learning more, we ask you to reach out to our head of investor relations, Merrick Iwahashi. His phone number, his email are right here. And we have a number of different strategies to express our macro themes, the themes that Tavi was talking about, and we're eager to reach out. We do caution. I do want to caution about the risks. That's why we read about the risks at the beginning of this presentation. The risk of investing in mining stocks and in exploration mining stocks is high. We think the rewards more than justify it if you know what you're doing, if you have an expert to advise you like Quinton, and if you can do it in a portfolio approach. But for investors who might be out there just listening to these videos and looking at our ideas, we don't recommend. We're not giving investment advice. We're not making recommendations in these companies. We do recommend that you have a professional advisor and you do this in a portfolio approach. And that's what we do at Crescat. So reach out to us if you want to learn more, and we're happy to engage with you and set up a call. That's all I have for today. Happy New Year, everyone. And here's to much better performance ahead, hopefully, for the mining stocks. That's not a hypothetical projection, just something that we believe is possible. All right, everyone. Bye now.